digital radio and online. This is Share Radio.
It's 27 minutes to 7. I'm Simon Rose, and this is Share Radio's evening show. And now it's time to talk investment. Last week, the Bank of England cut base rates from 0.5% to a new record low of 0.25%, signalling that could be further cuts ahead if the economy worsens. With many banks passing some or all of the cut onto their savers, this is putting even more pressure on people relying on their cash to generate an income. Despite poor interest rates, many people choose to leave any savings they have in cash rather than invest them. But there's a fear of investing harming savers and the UK economy alike. To discuss this in more detail, I'm joined on the line now by Ophir Gertner, who is co-founder of invest.com. Ophir, thank you so much for joining us. So what's behind this fear of investing among people who are happy to keep their savings in cash even if they're earning very little?
Hello, good afternoon, Simon. Well, we understood from our research is that the reason people are afraid of investing is mostly because of risk. They do think that the risk is very high, or they believe that they don't know too much on how to invest. They have lack of education, or they are too overwhelmed of the information there is. So I think those are the points that we need to address when trying to educate people to invest more.
And yet, over the long term, actually having money in cash has not been the best investment possible. And of course, in the last few years, although inflation has been relatively weak, the actual returns on cash have declined pretty much everywhere. Indeed, there are some places now, we heard only earlier in the week or last week, I can't remember, but the Bavarian savings bank in Germany is now going to be charging savers for keeping cash with them. So the attractions of cash seem to be diminishing all the time, but you don't feel that is getting through to savers, that perhaps there should be something else they're doing with their money.
You're totally correct. I think that many people fail to understand that leaving money just sitting in their saving account is not really a risk-free option. So as you mentioned, banks today charge a negative interest rate, and basically the cost of money, which is a phrase that people don't really use all the time, means that money does have an alternative. And if you can do something else with it or get some return, then putting it in the bank actually costs you something. So I totally agree with you. Today, you need to do something with your money, otherwise it is wiping out slowly.
Now, you talked about financial education being one of the problems. People simply don't understand other forms of investment. Cash, I suppose, however paltry the return, is at least something that everybody understands. It seems no matter what your level of financial literacy, you can understand that you've put your money with in a savings account, you will get a certain rate of interest, even if it is pretty minimal. So how do we help people understand that over the long term, there are other investment types that are perhaps better homes for your money? I mean, and clearly one of the problems people face is that often used phrase, investment may go down as well as up. And indeed they do, even if you can show that over the long term, they've done much better than cash.
That's correct. I think when starting to invest, you need to check three main things. First of all, how much money you have, the available cash you have for investment. Second of all, the term of the investment that you're looking for. Is it a short term or a long term? And then the risk factor that you are willing to take. The riskier investment you're going to do probably will give you the higher return. So those three things would tell me in which investment I want to invest in, and I think that's the way for a person or for anyone to measure what he want to do with his money. And what we learned from this research is what you mentioned before, that people think that equities are quite risky. And we think that it is risky, but compared to other instruments or to other financial investments, it's not that riskier if you put some diversification in your overall portfolio. I think the main word here is to diversify your portfolios, and then your risk factor will go down.
Yeah, certainly anybody in the UK who has diversified will recently have been pleasantly surprised by the effect on their portfolio of the decline in the pound, of course. How do people diversify? I mean, if they're not sophisticated investors and they want exposure to other forms of assets, perhaps equities, perhaps other forms, though, how do they then go about diversifying and not entrusting all their cash to a savings account? How do they make that leap?
There are a few ways. First of all, internet today holds inside many things, and you can do your own research and understand things. But diversification starts with three main things. First of all, cash, real estate, and some investment, financial investments. And those financial investments could also diversify between commodities, currencies. Sometimes you mentioned the decline of the pound. Some bonds maybe, and also some equities. For example, our product try to combine everything together and give you a very easy access to all of these. Because the problem today, as we mentioned before, is education and access to retail clients. And I believe that if you try to do your own research and try to do some education, and online today is a very good solution, then you find most of the answers on how to diversify your portfolio.
So clearly, you've got to put a bit of work into it. I suppose that's another problem, isn't it? That people have to do at least something, at least at the beginning, in order to get away from savings account. I was reading an article in the Wall Street Journal just the other day that said, in fact, in those countries where interest rates have turned negative, people are actually saving more in cash than before because they feel that's the only way they can actually protect their savings. But you would argue that they're doing exactly the wrong thing.
I would say that, there's a saying that cash is king, and I do support it. It is, but again, there is some diversification here. In times when the interest rate is so low or even negative, then you do need to hold some money in cash. But think of other things. I believe that real estate is an easy thing to understand, and people do try to invest in it, but the minimum for real estate is probably too high.
Yes.
So there are some ETFs. Yeah, correct. So there are some ETFs that deals with real estate or REIT products. And as you mentioned before, it does require a bit of research at the beginning, or to go to people who do understand.
Yeah, and go online, and I'm sure people could have a look at your own website, invest.com. Thank you very much, Ophir. I've been talking to Ophir Gertner, who's co-founder of invest.com.
Share Radio.